every building must be green certified. Why is it why is this important, and is it non-negotiable?
Yeah, that's a standard we've set for ourselves as a developer. As I said, there are a number of major trends here in the world today. One is this demographic change, two is digitization, three is climate change. For us as a developer, we are responsible. We don't want our activities to be detrimental to society. We don't want society to pay for private benefit. The number of investors participating are fewer than the people who are not participating in the REIT. So whatever we do, the buildings we do, should not be detrimental to the environment. And that's why we made a decision, actually as a group, that any development we do should be green certified. So the first building is, and you're working with IFC, so there's IFC Edge certification. So these are all green buildings. They are Edge certified. That actually they are more, they're not harmful to the environment.
To the environment,
we are considerate of the environment. And we're using common resources like energy, water, etc. in a responsible manner. That's why for us it's a standard we've set for ourselves.
It's a very high standard.
And we are doing it on both the residential and the commercial. So the assets have to be green certified. Now, if you put that as a standard, it means that any developer who hopes to get an exit through this iREIT has then to ensure that they are environmentally conscious as they do their development. We are now working on the rating of the unit itself to be green. So we're hoping to have finalized that process by the time we come to the listing or the issuance of the notes.
There are many investors who are actually increasing in number, who will be looking at this opportunity from an impact point of view. And I know you've mentioned this, but I just want to make sure we address that segment. What kind of measurable socioeconomic impact will be delivered through this?
I think we're looking at three areas. And you have to look at the whole ecosystem, the whole chain end to end. The first one, and the most critical one, is impact on people through employment creation.
So people.
We need to expand the number of enterprises that are setting up here and support those enterprises to employ more people. So employment creation, that is a tangible, measurable impact. Once people are employed, they are then contributing to the tax base. Our biggest tax source is pay-as-you-earn. So if we can bring more people into the job market and they are paying pay-as-you-earn, and even these new enterprises are paying the 10% corporation tax, we are contributing towards expanding the tax base. Not by taxing existing enterprises. For us, we are agents of expanding the pie, not going deeper on the existing pie. We want to expand this pie. Expand the pie. And as I said, even if you're talking of 40 buildings, and each building having an average of even 40 enterprises, this potentially can be 1,600 new enterprises. Having a product, you can't go to market a country. I always use this framework by Kotler, 4 P's of marketing. The first one is a product. Many times we market the place. The place is a country. And we focus on the promotion, which is the last P. But what I think has been lacking is the product. Where does a company that wants to come from China, it's a tech company, to set up in a friendly country, given the geopolitics across the world, where does it set itself up? And where can it set itself up within 3 months? So Kenya is a place, but where exactly, how, who will hold its hand, what license will it get, who will help them with the recruitment? This is what has been lacking. And that's what we are facilitating, so that we have a clear product to translate our competitive advantage in the second P, which is place, into something that can convert. Because we are very good at promoting as a country, but I don't think we've been as successful in conversion of these enterprises we've promoted to. So second is this expansion of the tax base. And the third is boosting our exports. Because we have a huge, we are running a huge deficit on the goods side of the current account, but we have a surplus on the services side. If we can promote that surplus and also boost even the export of goods, we can help narrow the deficit. If you narrow the deficit, you'll now be able to narrow the international borrowing by the government. And remember also, you've contributed to expansion of the tax base. All these things now have an impact on society, because money that would have gone to pay foreign debt is now available for healthcare. Is now available for social services.
To be invested locally.
It's available for education. And all those other things. So that's the S. In the ESG, in the ESG. That's the social.
And just to wrap it up, how does Terrific fit in the global movement towards sustainable investing?
You see, this is sustainable because, in a sense, it's a circular. It's a circular economy. You are offering a very competitive product to the enterprises. You are solving a need they have. If you look, even with all those bundled services that we are selling and the rent we are charging, one of the enterprises here told me that Terrific is the cheapest location, one of the lowest locations they have anywhere in the world.
Wow.
With more services.
Wow.
With more services.
That's a testimony. And now you're also giving them a very competitive cost of labor. They're accessing labor very competitively. So these enterprises are sustainable. Because remember, Kenya is competing with other countries. So you're not going to get enterprises setting up here out of their love for us. They're going to set up here because it makes business. It makes sense.
It makes business sense. And then you're also giving now the investors an attractive return, where their own flow, their payment they're getting is based on a real, tangible, valuable service to the end market. Interesting.
The REIT is going to be listed in the Nairobi Securities Exchange, NSE, USD board. Why was this important in this product structuring?
You see, a listed instrument, even for a pension fund, there's a broader allocation for listed instruments. So a trustee has more flexibility in investing in listed instruments.
So it's publicly available.
Yes, an insurance company has more flexibility in investing in a listed instrument as opposed to investing in a physical asset like a building. In any event, many of them are overweight on those kind of assets. So we wanted to give that kind of liquid instrument through the Nairobi Securities Exchange.
So it opens up access, transparency, liquidity.
And in fact, as we start, it's not that much. So I'm anticipating, because it's not that much, the volume is not high. Because the constraint is the income. You can only issue as many notes, you have only so much income, and you have this high yield you want to offer. So the value of notes available is a finite number. So I'm anticipating there should be more demand than, hopefully there should be more demand than supply.
I think one of the questions we've been getting from investors has been, how do you address volatility, especially in the early stages? Maybe we can touch on that.
Volatility is okay. I think there are two areas of volatility. We've tried to address volatility of dividend by dealing with the expenses within the iREIT structure. So if you underwrite those,
so you've underwritten that,
So it means the volatility of income is minimized.
Exactly.
Okay.
So you've made it more predictable.
More predictable.
More predictable. Yes, yes.
So the only volatility you're dealing with
yes.
is the volatility of the pricing in the secondary
market. Yes.
Okay. So if I'm taking a long-term view and I say I'm putting in my $10,000 here so that I earn $800, then that might not be as critical as earning my $800. So what we focused on dealing with is what is in our control, which is the volatility of income.
You want the investor to sleep peacefully. Knowing that a particular yield will be landing.
A particular absolute income will be landing.
Yes. Which is what causes market volatility.
Which is a major driver of
market volatility.
Yes. Now the other areas that where you might find the volatility is on the Kenya shilling weakening relative to the dollar. In which case there might then be more demand for this asset. It might be also the reverse. So there's some macroeconomic volatility around asset prices that is not in our control. But what is in our control? We've dealt with it. We've mitigated it to the greatest extent possible.
One other thing that you've been very passionate about is the governance structure of the REIT. And we have several service providers. We have the trustee, we have the REIT manager, we have the property manager. And this being we have some rates, but this is something that people are still learning. If you can speak to how it protects the investor.
So the way the REIT works is, you see, it's buying an asset sometimes from the sponsor. So one wants to be sure that that asset has been bought at a fair price. That's the role of the valuer. So we are working with a very credible valuer who has done the independent valuation. And the transaction between the owner of the asset and the REIT is is based on that valuation.
At arm's length,
Then obviously the asset cannot be held by the sponsor. That's why there's a trustee. So we are working with NCBA as a trustee. To hold the asset now on for the benefit of all the note holders. And then now you have the reporting accountant who is going to tell you how things are going. Again, that we are working with PwC for the reporting accountant. Then there's the iREIT manager. Now will manage the affairs of the iREIT.
Of the iREIT, yes.
Because those will not be managed by the sponsor. The sponsor is playing a different role. The iREIT manager is one who will write to the sponsor and say, we need you to pay $200,000 for the iREIT expenses as per this agreement. The other ones will coordinate with the property manager to make sure that the rent has come, it has been deposited, and it is paid on a semi-annual basis or a quarterly basis, as the case may be. That's the role of the iREIT manager, and that is Nabo Capital. So that's how it is organized. So you have
also the property manager,
and then you have the property manager, who we are working with Brawl. And the property manager wanted to work, and Brawl is very specialized on commercial property. So they understand how to manage commercial properties properly. So this is the role of all these different parties. But really, they are all working to take care of the interest of the investor. They, in short, in a fiduciary responsibility.
Correct.
To the sponsor. So that's a governance structure we have created. And that's really our strength in Centum, is that because any entity we create, we create knowing we're going to exit. And where we've always got very high valuations on our exit, is because of the governance we build within the operating entities. And that explains a lot of our track record and ability to attract quality investors into our asset, where even if a deal collapses with one investor, the following day you have many investors lining up to acquire the asset. So that's part of our pillars of enterprise development.
And I think what really comes out clearly is that this is about the ultimate investor. It's about protecting the investment of the investor, the end investor, and also offering them an attractive return.
So if you come tomorrow with a new issuance, to buy another building, then you want to find a market appetite. So we have an interest in because it's not a single asset REIT. we are looking at this as a long-term vehicle.
Yeah.
We have an alignment of interest.
Yeah.
In the long-term
yeah.
success of the REIT.
Of the REIT.
Yeah.
Yeah.